Welcome, everybody, to our Long Options webcast. I'm Connie Hill. Happy to be here with you today as we discuss this particular strategy. Now, a few of you asked some questions recently in a recent survey, and today we're going to tackle one of those questions. We didn't get to it last week, so we're going to do it today. It has to do with creating a watch list that is suitable for different option strategies, including long options. Okay, so we're going to spend a little bit of time on that. It's time for us to refresh our watch list anyway, so it fits in there very nicely. Happy to see so many of you friendlies out in the chat that we see week after week, and Will has this strong opinion that redheads rule. It is so true. Redheads do rule. But happy to see you here, whether you're somebody new with us or if you're somebody that I call a veteran, that you're here frequent. We love to see you here. Now, I hope you're following me on X. I'm Connie Hill CS. We have the pleasure of having James Boyd in the chat here today. James is James Boyd CS, and you won't want to miss his posts either. We'll put educational content out there, things we're noticing with graphs, or potential news, things of that nature. We'll post about it, and it's free to join. You can follow us for free, not too much effort, so that you can get in on those little nuggets that we're posting as coaches. Let's go through our disclosures, and I'll lay out our agenda here for today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for general information and educational purposes only. Don't consider it a recommendation. We'll be using the Paper Money software application. It is the most robust version of Thinkorswim. It's helpful if you'll use that paper side to test out rules, test out strategies that you might be considering. For the sake of simplicity, we won't talk about commissions, but just know you should take commissions into consideration. Investing involves risks, including the loss of principal. Past performance is no guarantee of future results. All right, want to just put in a quick plug here for upcoming workshops and market drives. Last weekend was in Dallas, this weekend in Orlando, towards the end of the month in New York with an advanced option strategies workshop. We don't do those as frequently as we do the basic workshops that are options and technical analysis. But then also on September 19th in Scottsdale, which is a nice place to go, market drive event on September 19th. It is only a one-day event. So if you're interested in any of these, come over to the website, log into your schwab.com, and you can register for those. Okay, they would be happy to see you there. All right, we are going to just talk a little bit about concepts of long options. And when we're talking about different examples that we'll look at here today, price, time, and volatility, we'll discuss those as appropriate, because those are the three biggest factors in long options in determining if the price goes up or the price goes down. Okay, or if it just stays right there. Now, as far as just long options go, I'm going to guess that most of you are pretty familiar that a long option means you're either buying a call or buying a put. Okay, it needs the stock to move. We need the stock to move in order to be profitable on these long option positions. They are also what we call theta negative. That means time decay wears on them. All right, there's an element of the variables that calculate the price of the option, and one of those is daily time decay. And so even if your stock just is sitting there, does nothing, it still will experience time decay in the option price. So we always want to be aware of that. Typically, they tend to be Vega positive. Well, what does that mean? Well, the Vega's issues. Maybe go ahead, hit refresh on your browser and see if it might catch up. The other thing you could try to do on your controls for YouTube, if you go up into settings, just go up there, and if it's maybe if it's at a very low quality of video, maybe change it to 1080p instead of the 480. That'll sharpen the look and the whole presentation. Okay, so you could try that as well. All right. Sorry, we're having some buffering issues. Let's head on over to Thinkorswim platform. Take a look at what's going on today. SPX, what's it doing? It's just putting in a brand new all-time high once again. We had some resistance here. We were kind of watching to see if it would make it over. And some may have had a flat line here. Some of you may have had a slightly diagonal line here. Probably not super material at this point because it's looking like it's breaking through that resistance here today. Now, the NASDAQ hasn't been as strong, right? It's sold off further than the SPX and the Dow did. But look at this. Right now, it is up above its 30-period moving average. That's the red line. The blue line that it crossed above yesterday is a 10-day exponential moving average. So definitely, it is swinging that direction. And if you had a diagonal resistance line in here, here's one from earlier, but I might draw maybe a newer one that hits maybe a couple of different points here, right? Where it hit resistance and bounced back down. And today it looks like it's breaking through that resistance. So bullish on that, up about 3% today. That's pretty powerful. Dow Jones is up 1.87%. Is it hitting an all-time new high? It is again today. Russell 2000, it might not be at a new high, but it might be getting close here. It's at 3,036, and its high was at 3,046. So it's only 10 points off its all-time high price. So moving up into that territory. Well, if that's the case, we would expect probably most things, if you were to pull up your visualize, you'd probably see mostly green on the heat map here, which is what we're seeing. There's a few that are a little bit in the red side, Amazon, maybe some small caps over here. But by and large, we are seeing a lot of bullishness out in the marketplace. If that's the case, what's happening with the VIX? All right, VIX should be low. And it's dropped down here to this 15, 16-ish range, where it is a little bit lower than where it was up here at this 20 range. When it gets above 20, then we're starting to feel the impact of implied volatility. We're starting to see maybe some swift movements in the marketplace, more volatility entering in. But today, I mean, it's popped up here a little bit, but basically it's down here at a lower range. So volatility seems to, I'm going to say, be in check right now. Now, I want to go back and I want to show you what happened with some of our previous trades. Let's maybe go here. Yeah, we can stay on the 6-month chart. That'll be okay. First one we're going to bring up is PanW. Now, Palo Alto Networks, let's maybe just kind of zoom in here. This is just a trade we got into last week. And what we were seeing was it bouncing off this nice horizontal area of support around 315. And what did it do for us? Well, it just continued to climb, climb, climb. We had put a target out here about the area where it is right now, kind of around that 361, 362 area. Sure enough, it hit our order earlier today, got us out of the trade. Let's see how profitable it went back here in July. It went up, it pulled up back, it's going back up again. This one, what's our, let me see what date we've got on this. We've got one of these that we decided we were going to do longer dated. Okay, so you can see we have a December contract here. And what we talked about was that we would let it run up and pull back and run up and pull back, treat it like it's trend trading a stock, but as the price of an option. Okay, it was at $30 when we got in. Right now it's at $47.90. We have a sell order here, and this is our initial stop loss. I'm thinking we ought to change it. Okay, so let's come take a look over here. Looks like we have that set to be 50% of the price of our beginning price here. So our 30.85, we said if it gets down to 50% of that, put a stop in at 15.45. Now, I'm hoping in your mind you're thinking, oh yeah, we want to raise that stop. Absolutely. Initially, some people might say, well, let's at least put it to a break-even point, right? Say, well, if it gets to 30.85 or lower, then get me out of the trade. There might be some minds here that are like, okay, it's, not unusual for stocks to maybe have a long little trend and then have a breather or maybe pull back for a bit. And so there might be some people here that say, well, let's put a stop loss on here where we could at least lock in some profits. Okay. Now, I don't know where you stand on that. And everybody could be a little bit different. Okay. But we definitely want to move it up. I'm just kind of looking at this here. If somebody wanted to be kind of tight with it, maybe we'd change this to say, get us out if the price of the option drops down to $40 some odd cents. Or some might say, well, let's just raise it a little bit above this 30 so that it has that wiggle room. Okay, the wiggle room to run up and pull back and run up and pull back. And let's show you where the chart is right now. It's coming into this place here where it was a high at 217.50. Right now it's at 209. So it's got $6 to move before it gets up to that type of a level. Looks like momentum is just starting to kind of blow over here. The zero line on the MACD, it crossed over that earlier today. The RSI is up, letting us know that that momentum is high and bullish on it right now. But it could come down to here, right? It could run up here and maybe even pull back again. It pulled back a little bit lower than even where we got in, okay? But we just kind of watch the support and resistance, let it have its wings, so to speak. Now, I'm going to ask you, I've already got my mind made up where I want to put this stop loss. Where would you want to put the stop loss? Would you want to just be arbitrary and just grab the stop and pull it up? Probably not, right? Let's come over here and let's take our working order right here, that stop loss. We're going to do a cancel replace. And we're going to set this out here. Okay, so Larry says maybe $45. So Larry, you're saying put it on pretty tight. And we definitely could do that. We're up $1,700. I was looking to see if it was showing the percentage on that. Just kind of eyeballing it. It looks like it's maybe up a little over 50%. Okay. What we're going to do here, we're still going to give it the room. We've got a December option. We want it to run up, pull back, run up, pull back. That was our plan with the trade when we started. Okay. So we're going to go ahead. We're going to maybe put this here, and it's still going to be a stop loss. We're going to put it about, say, 34.85. Now, some of you might not want to give it that much room, and that's fine. That's not a problem. My intent is that we'll probably change the stop loss a lot until we get closer to it peaking out, maybe closer to December, a month out in December, and then maybe making some decisions of more aggressively locking in that gain. Okay. Kara says, does a trailing stop make sense here or not so much with options? You certainly could. Remember, the option prices fluctuate so much more than a stock price does. And so you want to keep that in mind with a trailing stop loss. Is if you put it on too tight, just you're going to be plan on getting stopped out pretty quickly with it. So you need to make sure you decide how much leeway on that trailing stop loss you might want to give it. Now, Kevin says maybe we could go 2% below the red moving average. And so here would be 2%, or here's the red moving average at 190. So maybe about $4 off of that would be maybe about 2%. There's a lot of ways that you could do this. Okay, you could do it based on technicals. I just adjusted it based on the price of the option, but we may adjust that going forward. Okay, let's see if anybody else have another idea here. All right. Charles, you might be having an issue. Yes, it has started. I hope you're hearing me now, Charles. Yeah. Thank you for typing that message over, Jay Richardson, to Charles. All right. So that's CrowdStrike. That's PanW. All right. Let's talk a moment about Apple. All right. I'm just going to tell you up front that our Apple trade, we were planning on trend trading this, okay? Bought a longer dated option on it. I think we bought December. In any case, something happened with it in that yours truly saw earnings coming up, and I forgot that it was our longer dated option. Okay. And I was like, well, we already decided we weren't going to hold it over earnings, which really isn't true on our longer dated options. We probably are going to hold it over earnings. So before they announced earnings, we got out with a profit. And then a few minutes later, I realized, oh, Connie, that one was longer dated. So let me just kind of show you here on Apple. So here's where we got in on the 21st, and here's right before earnings when we got out. So we made about $300 on it is all. And then it was how many minutes afterwards I realized that was our longer dated option. So I went ahead and I bought into it at the higher price. It's like, no, we wanted to keep this. We want to hold it over earnings. And then what's interesting here is I don't know if it was from our one cancels other order or something in that case, but what I'm seeing here is basically that it sold us out, that 320 call, then it sold us out again, and we were ended up being short. We do not have an intent to be short this call option. And so before class started, I was like, oh, just go cancel it. Okay. Next time Apple has a good entry and we feel like we want to use it for a longer dated trade, we will do so. But I know some of you are following along. So I made the first error, paper money made the second error. Or I could have done it. In any case, this is where Apple sits right now. You guys know they had their earnings. Market felt like their growth was slowing down significantly and therefore adjusted the price. All right. Okay, it looks like we finally have Charles with us here. Now, Michael says, does the trail stop go off the current price regardless of when you set it? If I set a trail stop today from a long call I entered 3 days ago, the TS is based on today's price, correct? The trailing stop, yeah. Whenever you put that trailing stop on, boom, that's when it starts. And then if you said, hey, if it goes down $5 from here and it goes down $5 from when you put it on, that's when it would trigger. Just depending on how you have it set up. So yeah, it doesn't really care when you got in because you use a trailing stop loss when you're at a point you want to be locking in some profits. Okay, so yeah, it does it from that moment on. Okay. Sam says pants on fire for Avgo. Well, that's going to be our first trade example here today. Let's jump over to it. AVGO. Now, I really actually, we're not going to go to Avgo yet. I want to show you, we've got to answer the question I mentioned in the intro that somebody asked. I'm going to read you the question. It says, could you give us a long list of stocks? Well, actually a longer list of more stocks with heightened volatility that are suitable for trading options. Okay. Number one, we have a watch list that we work with in our class. It's time to update it. Last time we updated it, I've been using it in all my option classes, was June 11th. So we're going to have maybe some that drop off, some that come on. That's fine. And we probably want to update it every month or two. So it's time for us to update. So we're going to do that first. And then I'm sure Avgo's on the list and we'll circle back to it. So on our scan, and let me just come up here and hit a reset so we can kind of look at this. I saved this scan and it's kind of two parts. This is called liquid options. Okay, and it's a very simple scan. It is looking for prices above $40. Now you could look for prices lower than $40. That's not a problem. However, the intent of this watch list is to use it for both bullish and bearish opportunities. And so for something that's bearish, I definitely want it trading higher than $40. We want it to have room to drop. Okay, so that's why the $40, you can do it different. The volume, I've said, this is a study. Remember, that doesn't work in paper. You've got to run it on your live side. And I said the average volume over the last month, 20 periods, is greater than 2.5 million. Now, 2.5 million, so that we're trying to get really liquid options. In long options, there's only one leg that we're trading. But because we're using it for other classes as well, if you have 2 legs or 4 legs, then it's even more important that you're using options that have a lot of open interest out there, that they're very liquid. Okay. Now, up here at the top is where we modify this a little bit. Now, what we do is we say scan in this public watch list, penny increment options. This simply is a publicly traded watch list that can trade in penny increments as opposed to dime increments or 20-cent or 25-cent increments, okay, which usually means lots of option activity, lots of open interest, okay? Then we intersect it with the S&P 500. And really, to do that, all you're doing here, I'm going to just show you where it says intersect with. It was down in the public watch list that I found the penny. Let's see if it's on the screen. Penny increment options is right there. But now I'm going to go down to the S&P 500. Okay. And so select that there so that we're intersecting 2 lists. Well, what is the S&P 500? Those are pretty broad base of stocks, but typically they're larger cap stocks, right? Some of the larger companies. And so you can do this with smaller companies as well. It's just that they don't typically have a lot of volume activity, right? Where we're saying that we're on it consistently about 2.5 million as the minimum. Okay. Let's go ahead. Let's run our scan. Let's see how many come back here. And we come up with a list 113 long, which is great. It's nice to have some possibilities there, okay? Some of you might feel overwhelmed with that big of a list, in which case maybe you just say, show me the first 50, okay? But what we're gonna do here, we're gonna save this watch list out, and I'm gonna call it Liquid Options with today's date, August 4, so we can know, hey, when do we need to refresh this? Okay, so that's part 1. We're going to go ahead and save this. Now, part 2 of the trade is that we're going to change this from the S&P 500 to the NASDAQ. And so the NASDAQ, let's see, those are personal. Let me get down to public. There we go. And then you can either do the NASDAQ 100, which we have done in the past. I'm just going to do the NASDAQ composite. Again, same requirements, same penny increment options. We're going to go ahead and scan it. Brought us back about 57. So we're going to add this 57 to our liquid options watch list that we already did based off the S&P 500. Okay. So what we're going to do here is a different step. Okay, we are going to export this to Excel. And I'm going to bring up Excel here, and I'm just going to delete all of this. Let's maybe just do, I'll just delete everything so we just kind of have a blank worksheet here, okay? Sometimes it's helpful to have that open before you do the export. So now we're going to come up here to this line above the flame, and we're going to say export. And then I'm going to have it export to Excel. This is saying, okay, if you want, you can do an edit paste or a control V to paste over the results. And I want you to notice here at the top, we've got Honeywell, United Airlines, CSX, transportation, just so that when we see the spreadsheet come up, you'll go, oh yeah, I recognize that. Okay, those were the stocks on there. So as we bring up the spreadsheet, I'm just going to go in the top corner. The computer already pasted it to the computer short-term memory. It's called the clipboard. We're just going to do a paste. So paste everything over. But really, all we want is this. We want it to go from Honeywell to the bottom, which is going to be Meta. All right. And I'm going to do a copy. That's a Control C on the keyboard, or if you want to do it with your mouse, right mouse click, copy. And then we're going to bring it over to that new watch list. Okay, so how are we going to do that? We're going to go watch list personal, liquid options, 8426. Okay, it's right here at the top. And let's maybe open up that. Our scratch pad can go lower right now. Then this is the next step. And there's a bunch of different ways you can do this. I think this one might be a little bit more streamlined than maybe how I might have shown you in the past. But we're going to click on this liquid options and we're going to say import because we want to import some additional symbols to it. And then again, those ticker symbols are sitting out in the clipboard. So we're going to select paste symbols from clipboard, Honeywell, UAL, CSX. Okay, these are these guys up here at the top of it. And we don't want to replace the current symbols. We want to add to the current symbols. Okay, so we're going to go ahead and we're going to say, okay. And now this is the watch list that we're going to use for the next little bit. Okay, we're going to be using the stocks on here, most of which should be liquid. But if you come across one that maybe isn't, you can just take it off the list. That's not a big deal, right? Because ultimately, you want to have a go-to list that more likely than not, you're going to find liquidity in it. Okay. Now, one thing I want to add on here. I did this watch list the way that I wanted to do it. Okay. But part of this question was somebody wanting a longer list with heightened volatility. How can we add heightened volatility to this? Okay. Because some of these, we're going to have some that are real volatile, maybe some that aren't as volatile. So if you wanted to add that additional element, we're going to come over here. We're going to add a filter. We're going to do it on the stock. And if you wanted all of your stocks to meet this criteria, the step I'm going to show you now, you would have done the first time we did our penny increment options against the S&P 500. Okay. But I didn't want my watch list this way, so that's why I didn't do it initially. So over here, let's see, we have an additional stock filter, and we're just going to look for beta. Beta of a stock. Some of you are familiar with beta, some of you might not be. Beta basically tells us how much is this stock moving compared to an average stock on the S&P 500. So if it's about the same, it's a beta of 1, okay, or basically 100%. If the SPX moves at whatever that amount is, then a beta of 1 would mean that individual stock is about the same. But if it's a value lower than it, say it's a beta of 0.5, then it would be about half. And beta is a good gauge for volatility, okay, when we're talking about more volatile stocks. So if you wanted to here, you could say, well, I'm going to increase the beta. Maybe you want a minimum of 1, okay? And then maybe you don't want to max it out because you want a lot of volatility in there. Yeah, it could be 4 times or 3 times or 2 times the volatility of the S&P 500. Okay, I'm just going to erase that. And let's see how much it shrinks this watch list down by. Okay, showing 57. Okay, it dropped it down to 46. So it dropped, what, 9 off the list. Okay, so most of them at least had volatility of a 1. If you want more than 1, let's say you want 1.5. You are like, I want these stocks to be on the adult roller coaster. Man, I want them ripping up and coming down. Okay, which for long options could make sense. Let's see what it drops it to now. 46. This is on the NASDAQ. Okay, chops it in half. Okay, so now these are the stocks that have a lot more volatility. And you could do the same thing here. Just save it off, bring up the S&P 500, run it again, merge the 2 lists like I showed you, how we just got our liquid options list. Does that make sense to everybody? Okay, that's how you can do that. All right. Sam says, yeah, we've got the usual suspects on the liquid options. Yeah, they are stocks that we frequently work with, right? Because they have the liquidity. All right, let's get on with some trades that come from this list. All right, now I told you the first one was Avgo that we were going to start with. And it's not because Sam wants it, it's because Connie wants it. All right, what's going on here with Broadcom? Well, it had been kind of a little pullback, and then it just kind of went sideways for a while. It's like it's catching its breath, it's gearing up. That's a healthy thing for the stock to do. Although if you're a holder of the stock, it gets kind of annoying, right? But today, what's happening? Man, it's having a nice breakout. And remember, support and resistance are areas. So it's breaking out above this area that's kind of been holding the stock down. So clean breakout here. The day's not over. Our volume is not quite to average yet, but we still have a few more a few more hours that the market will be open. Okay. It is a little bit more of an expensive stock, 419. That means the options are going to be more expensive. And if you have concerns about having that high of a price of a stock, then you might go and change that filter in the scan. Maybe you go from $40 to $150. Okay, so that it maybe narrows down the kind of stocks that you can work with. Trying to give you lots of ideas here, how you could adjust this criteria based on what you need. All right, so let's go to the trade tab here. That was our CrowdStrike. We were looking at Avgo. Where could Avgo go to? I mean, it could get up here to 495. I mean, that's a pretty long run. That's about, if it's a 406 and we say to 495, we're saying it's got an 89-point run to get up there. So we might want to give it plenty of time, right? It's not guaranteed to go there. That's just where we see the most recent peak. And I think this is an all-time high here. If I come down here and do this, let's just do the 10-year. Yeah, see, that's sitting there at an all-time high. So as we come back here, we could do a couple of things. We could say, well, what was the height of this range? And I might want to move this up a little bit here. Let's maybe move it up so we've got some touches on the line here recently. And let's measure this. Let's see. Oh, let's get rid of that little guy. There we go. Let's measure it from 406 to 359. I'm going to let it kind of count it for me. So it's saying about 47 points-ish, 46, 47. I'm going to put that in here. I'm going to duplicate the trade, or the drawing rather, not the trade. And then I'm going to put this at the breakout zone, because this is going to give us an idea of something we could use for a target if we wanted to. If we wanted to say, have a first target up here, say about, this is saying about 451, and which maybe is about halfway up there to 495. Okay. We might want to do that as our first target. Okay. How much time should we buy? How much time do we think it might take it to move to the target? Now, I know it's moved a lot today, having a nice breakout, but it doesn't necessarily mean that it's just going to pop straight up. I mean, that'd be lovely if it did, right? We'd all be happy campers. And it is a more volatile stock. Okay. Let's just play the one move. Okay. The one move, we want to buy plenty of time. And when I say the one move, I mean the one up to about 450. Okay. Could it take it a couple of weeks? Sure, it could take it a couple of weeks, but we want to determine how much time and add extra time onto the option so that we don't run into what? The theta decay, so that it's not as big of a factor for us. So we're going to come out here. We're going to take the one with 45 days worth of time. So if it takes a couple of weeks to move to the target, great. We still have a buffer of about a month. Okay. And then I was working on something else that needed 120 there. How about if we just go 15? 15 should be good enough. All right. Now, if you want to be more conservative, you can go in the money. Typically, we will just kind of take the at the money approach, starting with an at the money. Sometimes it might be in the money a little bit or out of the money a little bit. And so 420 really is our at the money. And so we're just going to go, it's going to be slightly out of the money, no intrinsic value on it yet. And we're going to go ahead and buy this option. But let's put on a target and a stop. So we're going to say with OCO bracket 1 cancels other. So our target, I should have maybe written this down a little bit better, 451, and there was some change on it. What if we just go 451, leave off the 68 cents? Okay, let's go 451. This is not the price of the option. We don't know what it's going to be when the stock, if it gets to that point, and how long it might take. So what we're going to do here, we're going to change this to a market order, and we're going to make it good till canceled, and we're going to say based on the price of the stock getting up to 451. So symbol, mark method, that it's greater than or equal to, I'm going to put in the 451. All right. The other one we're going to have be based off the price of the option. If we were going to have it be based off the price of the stock, we could put it in here. So like if we said, let's go ahead and just save this. If we said, well, if it goes below something we specify, if it goes 2% below 406 or something like that, and we wanted it to be based on the price of the stock, we could go and plug it in there as well. Okay. This one, at least to start out with, we're just going to do at roughly 50%. Okay, we don't want to put it on a stop too tight, but so we want to be somewhat careful here. So what is this going to be about? 17.15, I think, is going to be about half of 35.30. Okay, if I'm wrong, I might be off a little bit on that. Let's just use, we'll go 35.30 times 0.5. 1765. I was off 50 cents. Oops, let's just type that in. All right, 1765 is going to be our stop loss. It will too trigger a market order, right? So we don't know what that would actually be at that point. Hopefully it'll be something close to 1765, but we just know we're not guaranteed that particular price. Okay, we'll just do one contract here. If you wanted to do more contracts and you wanted to extend this trade out, one thing you could do is you could put on additional target or additional contracts and then maybe get out one contract at the beginning level like we are, and maybe the second contract having it go up a little bit more. Okay, let's go ahead. We're going to hit confirm and send. I'm going to put this in our, where did our long options go? There they are. We're going to put that in our long options group. Now I want to get a couple of other trades on here, so we might be moving a little bit fast. Let's go Zscaler. Software seems, and cybersecurity seems to be holding pretty secure. Yes, it had a pullback, pretty decent support around 119. And then again, it's been stuck in a little bit of a horizontal, kind of a sometimes we'll call it just a consolidation pattern. Okay, so 139.5 up to 155. So we could do the same thing, measure this. You know, what is the height here? Oops, got to change my drawing tool. What's the height? It's about 14 points, about 10 or 11% there. We duplicate it, we say, all right, we are going to say maybe something in the range of, that's not that big of a target. As I look at this, it's already here. It's maybe already halfway to that smaller target. Let's take a higher target. Let's not take the tippy top point here of 190, but maybe let's get here where it's run to frequently, 182.50. I'm just going to plug that in right there. And then let's make the stop be based on the price of the stock here. So on that, let's go to our calculator. So let's go 139.49 minus 155.05. All right, so 1556 is how much we're going to have there for our target. okay? This here, 139.49, let's go 2% below it. Or actually, I take that back. The 155.05, that old resistance should act as new support for us, right? Multiply that by 0.98, that gives us 151.94. Here, 151.94. All right, let's go plug that in now. Zscaler, it could get up here quickly. It might take it a couple weeks, right? So we want it again by enough time. It has some weeklies, but that would be really pretty aggressive. Let's go with the September option. And on this one, we're going to do the same thing at the money. In this case, is going to be our 160. So it's going to have a little bit of intrinsic value to start with. We'll say buy custom with OCO bracket. Actually, in this one, we'll do first trigger sequential, and we'll just do 1. We're going to make this a market order. Going to make it good till canceled. Then we're going to put the price of the stock here. All right. So if Zscaler goes at or below 151.94, which is the stop, make sure we've got it going the right way. If it's less than or equal to, or if it's greater than or equal to 182.50, that's where we want to get out. Now we can adjust the target, we can adjust the stop along the way, not a problem. So let's go ahead and hit save, and we're going to put this to our long options. All right. Both of them got filled. We spent a little bit of extra time working on a watch list, a new watch list. So only having time to do a couple of trades, but we're going to follow up on these. I'm going to watch them during the week. We've also got our CrowdStrike out there that we modified the exits on it, so we'll be watching it as well. Couple of other stocks if you wanted to take a look at, if they met your entry signals and the type of stock you're interested in. Another stock off that new watch list is Union Pacific Railroad, and it's having a nice little bounce here. Good support here around 288, and then we've got kind of a bullish engulfing candle off that support area. So some of you might like something like that. Or USB is another one. It's financial stock. Might consider that as well. Now my time is up. I hope you're subscribers to our Trader Talks channel. It just helps you find our content. If you're not, go click that button in the bottom right-hand corner that says subscribe. You'll be a subscriber. Now, I did not see a survey out here today. If so, James will repost it, but I didn't see anything out here yet today on that. And if this was helpful to you today, hit the thumbs up on the way out. James and I would love a follow on X. Now, coming up next is supposed to be getting started with technical analysis. I can't remember who's teaching that class today, but somebody really awesome is teaching that class today. Okay, you guys have a nice little break here. We'll see you back here at the top of the hour. Bye-bye.